Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and in today's video I'm going to go over the trades I executed for November 13th. I'm going to talk about the project State of the Union and then also discuss the plan for tomorrow with regards to what options I plan on trading. As you guys have seen on your charts and in the news, market was red today after we reopened the government. There are plenty of different reasons as to why it went red today, but end of the day, it doesn't really matter. There isn't a cause for panic. This is just a typical, red reversal. Markets were high, goes red a little bit, and then it's going to turn around eventually. So I wouldn't panic in any regard. My account's down $15,000 as of yesterday's video. And you would think, oh, it's never a good sight to see that just $15,000 evaporated over a one trading day period. But the investments I'm in, I'm fairly confident they're going to go back up. I will say Tesla, I think it will go up. It's just a matter of time. Definitely think I was a little too heavily invested into it. And once I sticked my foot into the deep end with Tesla, then I fell into the water. And now I'm stuck with it for a little bit. We'll see when it recovers, if it recovers in the next couple of weeks, months, whatever. But then outside of that, my normal QQQ trading, I think it's been doing as expected for the type of market we are currently in. So as you guys can see, Robinhood account is at $199,278. Let's head over to the spreadsheet and talk about the trades I executed. Looking at the November 13 trades, most of these four Tesla options and this QQQ all are week-long expiration, so they're going to be expiring tomorrow, November 14th. And then the two trades I ran were one covered call on 100 shares of QQQ, and then I also ran a cash secured put because I had some cash available. My buying point for my covered calls were at this 622. So one of my main core principles is never choose a strike price for your covered calls that is below your cost basis. Robinhood will give you some average number that is going to look a little bit better because it also combines your premium and then your average share price. I don't use that number. I just use a flat when I got assigned price. And so I chose an at the money strike price at the 622. I didn't populate any of this data. Shame on me. But the premium I made for this 622 strike price for my 100 shares of QQQ was $57. It expires worthless. There really isn't anything else to talk about. And then going on to QQQ cash secured put. So the market, when it opened, I think that was, it was like 618 or so, something 618, maybe 615. So it opened up a lot lower than when it closed last night, but chose a 609 strike price for my cash secured put. So basically the way that cash secured put works is if the market goes down to this number, then it's going to get assigned if it's at or below 609. Covered call is the opposite. It goes to the strike price or higher, then it gets assigned. But for this cash secured put, bagged $48. End of the trading day, the market did go below 609 when it closed. So therefore, I got 100 shares assigned at this 609. I just want to point that out. Let's head over to the other side of the spreadsheet and talk about just a quick high-level overview of the State of the Union, state of the project. Just going to give a high-level overview for this part. Like I said, for November 13th, bagged $105. As you guys can see, yesterday's account close was $215,000. Today's $199. So I basically lost 10.37% based off yesterday's close. Not necessarily too happy about that, but I think it'll go up. Currently, when I started my own options trading in April to now, I'm up still 32.75%. And then I have realized $67,191. I'm going to quickly highlight my trade win percentage. I am winning about 98.67% of my trades, 148 winning days, 2 losing days. The losing days were, one day was off of inexperience, and the other was based off of not understanding how some of the options assignment works. So if you took those 2 days away, I would have been trading at 100% thus far, but we remember the trades that we lost, not the trades that we won. I'm not going to go into detail of any more numbers there. I want to keep this nice and quick because I'm on call and I have page anxiety. For the current week we are in, I have bagged so far $4,491. You wouldn't think I would make this kind of money because the account is a lot redder than when it was when it first started this week. But I did bag $4,491. And as long as I don't sell below my cost basis, I don't realize any of these losses. So all of that money I lost today is just dashboard money. I didn't realize anything. So it could easily come back all tomorrow or in a week from now or a month from now or a year from now. Hopefully not a year from now, but I'm pretty optimistic my trading will be a lot better than that. For the month of November, this is, I think, what, the 9th day of trading. We're at $6,752 of gain for that month. And for the yearly tracker, we already mentioned it. I have locked in $67,000 of appreciation and premium gain. Awesome. Now that we have all of this laid out and spoken about, let's head over to Robinhood. I'm going to run probably 2 covered calls, and if the market's going to continue to go down, I think I might run another cash secured put. So let's just head over there and see what that might look like. But yeah, guys, so the way I envision, the reason why I'm still running cash secured puts, even though the market is red, people, whenever they see the red market, they get this weird anxiety and they don't want to buy shares, and they think they're going to lose all of their money because the market's red. However, this is the exact point. You should be buying shares. So don't be afraid. If you're thinking, if right now, I think everything's at a deep discount. Nobody knows how much further the market's going to go down, and nobody knows when the market's going to recover. So if you're looking at the share price, which is what I'm looking at right now, I think there's plenty of discounts because literally a couple of days ago, QQQ was trading at 638. Now it's at 606. Where is it at right now? Yeah, 607.85. I think right now it's a steep discount, so I'm going to take full advantage of the price being this low. I'm going to try to lock it in, and then as the momentum heads back into the bullish direction, then I'm going to be able to lock in a lot more gain, a lot more premium, capture more appreciation whenever the market recovers. And I call this like the spring tension, right? So as the share price is going lower and lower, you should be loading up on more shares or more contracts of a specific underlying or an ETF. So basically, when it's kind of like a spring, right? The more tension you put on the spring, when it rebounds and you let go and the market changes direction, it's going to blast up. So that's kind of the same philosophy I'm having right now. Market's heading lower and lower, but I'm buying shares at different price points, right? My first price point for QQQ, 626. Second price point, 622. Today, I bought in at 609. If tomorrow the market continues to go down, I'm probably going to try to choose a strike price at that 600. But when the market does turn around, we're basically loading up that spring and then it's going to blast up. That's ideally what I'm trying to do here. And on that blast up, hopefully we all lock in a ton of money. I may incur a little bit of margin cost, but I think the amount of money you're going to make on that spring load back up or that spring release back up is going to be worth whatever margin interest you incur during that short period of time as you're surging. But looking at my current account, I have the 300 shares of Tesla. Those are locked in as covered calls. I can't really do anything with those until tomorrow, expiration. NVIDIA, I referred a friend today at work, and I got $5 of NVIDIA, and I think I'm already down on that investment. Let's just look for, yep, already down like 50 cents on that. Cool. And then I have 300 shares of QQQ. 100 shares is tied up as a week-long covered call, so I can't really use that. So I only could use 200 shares of QQQ for my trading tomorrow. And then ideally, I'm probably going to choose a cash secured put. Let's see. So let's take a look at what some of these covered calls might look like. Sell call. Expiration tomorrow, November 14th, 0 days to expiry. Expiration. QQQ is trading at the 607.71. My most recent price point is the 609. So whenever I'm running my options trading, I'm not going to choose a strike price below my buying point. And the way I treat my 100 shares of QQQ, whatever my buying point was, that's a separate silo of money that's completely independent of itself. I don't let Robinhood's average, price number dictate where I should be running my covered calls, because it's basically going to average all of the share price you have, and whatever premium you collect during that time, it's going to basically bring that cost basis down, so that whenever you're running covered calls or cash secured puts and you're receiving that premium, if you're using the average, the most recent average, you're basically starting at null, zero, and then because you choose a more aggressive strike price, then you finally made your first dollar, versus I rather lock in my premium and then just keep taking worse premium until the market recovers to whatever your buying point was. That's just also maybe my third philosophy I follow. But let's look here for the sell call, the 609. Yeah, guys, tomorrow morning, these covered calls are not going to be at $405 per contract. It's going to be a little bit lower. Not a little bit, it's going to be a lot lower. But ideally for tomorrow, I will run a 609 covered call if the market is, below. If it's anything above, I might choose a strike price higher. That's whatever at that money. So say if the market opens and it recovers to like 611, I'll probably just run at the money at 611 so I can get this assigned off the books and then lock in appreciation gain and then also that premium. And then the other covered call I had was at the 622. So like I said, I'm keeping the 100 shares of QQQ independent of each other. I also run this for all of my single stocks like Tesla. So my second set of 100 shares of QQQ bought in at that 622. So ideally for tomorrow, I'm probably also going to choose the my at the money buy-in cost for QQQ. So then I'll run an option at the 609, 622, and then I'll probably also run a cash secured put so that if the market goes down, I'm going to continue buying these shares at discount. And then eventually I'm going to release that spring and then we're all going to lock money on the way up. So for tomorrow, these numbers look a little bit more accurate for the cash secured put side of things. I'll probably choose, I don't like even numbers like 600, 610. I usually like doing 1 or 2 above it or below it. So I probably might do this 599. Delta is going to be significantly lower, but I'll bag in that $67. So tomorrow, 2 covered calls, 1 cash secured put, nothing too fancy. This is the point in time to buy in the market, guys. Don't be afraid. We don't know how much more it's going to go down, but it'll also very easily turn around and start heading back up. But that's the video, guys. Wanted to make it nice, quick, down and dirty because I am on call. Don't want to get paid and just want to upload this as soon as possible. But yeah, hope you guys are doing well out there. Stay locked in, stay harvesting, and Matt out. I will see you in the next video.